Forms of business ownership. Many of you would love to start a business someday and you have to form a business. And the easiest way is just a sole proprietorship, right? You just go down to your local city hall and you file for a business license. I'm sure it's online at this point as well. Um, you might want to check with your local city ordinance or the local government. There might be ways to just get temporary permits and things like that if you just want to try something out. But technically, you should have a business license if you are, doing any kind of business activity. There are exceptions, but for the most part, most businesses do. Um, and then on top of that, there's some other options as well, especially if you're a little more serious and you want to take some advantages, both from a taxation perspective, paying less taxes, being more efficient there, as well as if you have multiple people involved, right? It's not just a sole owner. You have to look into these other options here. And then also with liability meaning twofold. One is, if somebody gets hurt on your premise or what you're doing your work, they could sue you potentially. And there's different ways to do corporation and LLC, for example, where you can not be held liable from a personal perspective. Additionally, with money in a corporation or LLC, with the less liability, if your company goes bankrupt, that doesn't mean your personal taxes, your personal social security number gets affected with that bankruptcy as well. It separates the business from the owner. So we're going to talk about that momentarily here. But as you see in the US, the majority of businesses are a sole proprietorship. If you look at the next bubble here on the right, the majority of money that's produced, right, products and services, corporations account for 81% of products and services sold in the U.S. I'm sure this has actually shrunk a little bit over the years. This is probably about 10 years old by now. But I'm sure corporations are still at least 75%, right? So it's kind of the reverse from how many people are actually operating, right? There's way more sole proprietorships than are corporations. However, the corporations are vastly more efficient as far as producing goods and services. So what are the advantages of a sole proprietorship? The big one just being it's easy and it's just you could just do it. It doesn't require any paperwork, things like that. But it's really the biggest disadvantage is the one that's highlighted here, which is unlimited liability. That bankruptcy, if somebody gets hurt, it's all on the owner. Okay, so you take on a lot more liability. And then limited lifespan. When you die, the business dies. Then we have partnerships, which is very much just a sole proprietorship with extra people. So, you had if one of you dies, it's a partner of two. The other one can keep the business. Or if it's a three partnership, it could be one third, one third, one third. If one dies, the other two will inherit that, or however you have it set up in the agreement. And then you have more financial resources, right? You're going to have more people with more bank accounts, so you have more resources. This one is big right here, disagreement among partners. For example, if you're a 50-50 split, you own half and I own half, and you say, I want to spend $10,000 on social media marketing, and I say, no, I want to spend that $10,000 on a new refrigerator. If we cannot agree on where to spend the $10,000, nothing happens because it's called a tiebreaker unless we have some sort of unless in our agreement we set something up that said who would be like the tiebreaker, and we have like maybe a friend that's their job, or we have to go to court. We might have to take it to somebody who can actually help us out from a legal standpoint. So disagreeing amongst your partners or if one partner wants to leave the business and one doesn't, that's really the biggest problem with partnerships. Corporations, there's two types of corporations, the C Corp and the S Corp. The C Corp is the more common one, but smaller businesses can absolutely do an S Corp, and it's much easier to incorporate, and there's some advantages to it we're going to see in a second. So here you go. The biggest advantage of corporation is what the sole proprietorship can't do, right? This has a limited liability, right? So less liability for the owner. When the owner dies, the business can still go on. You can change the ownerships really easily. Really, it has a lot of advantages. You might be wondering, well, why doesn't everybody just do a corporation? Because it's very costly and timely to do that, and it might be unnecessary, especially if you're a very small business. But yeah, if you're a larger business, you're making good money, absolutely, you should be considering a corporation. And there you go. That's why. Initial cost, lots of paperwork, 2 tax returns to do, so you have to pay more accountants. It's a lot. Now, how do corporations actually work? Well, there's a hierarchy as you see here. You have the owners and the stockholders, right? So those are the people that actually own equity in the company, right? They own a piece of the company. They can own that equity privately or publicly on the stock market. And then they hire a board of directors. Those directors, make decisions, big decisions. As far as new products and services or the direction of the company, they do all those things. They're kind of the big decision makers. Then you have the actual company itself, people who work for the company who are getting paid by the company on the payroll. You got the officers, which are your CEO, your CMO, chief marketing officer, chief executive officer. COO, Chief Operating Officer. Then below them, you have your managers. You might have like a senior managers, mid-level managers, supervisory managers, and then you have your everyday employees, right? So these are like your line workers, things like that. So that's how the business works, and so you can see that there's no conflict of interest here. That people are there's checks and balances of who gets to hire who. Now, is it perfect system? No. For example, you're seeing that right now as I'm recording this. There's companies being taken over like Twitter. Elon Musk was considering buying Twitter. There can be hostile takeovers, things like that. So it's an interesting dynamic, and we're living through some of it as we speak. So, and then here's your limited liability corporation, very similar to a C corp as far as the advantages and disadvantages. And then lastly, here's just a really easy way to remember the differences between them, like the periods of existence, like when do they end, liability, which is, bankruptcy, as well as, any kind of lawsuit or anything like that. Management, taxation and raising capital. So here you go. You got sole proprietorship, partnership, again, just like sole proprietorship, LLC. And so LLC has some of the, it doesn't have the public equity stockholders, which, make it a little simpler. And this is a big one right here. Corporations can raise money through sales of stock and debt. And then here's a little cheat sheet for you. So there you have it. These are the 5 main types of business ownership. There are others, like you can get into franchises, you can get into co-ops. Then there's mergers and acquisitions when the two companies come together. There's a little bit more, but this is if you can get what we just went over, you're doing great. So I want to do a quick example. Pretend this is Sally, and pretend Sally is a millionaire. She has $1 million, but she's bored, so she wants to start her own business. Now, with all the money she has and what she's worth, she probably wants to incorporate or do an LLC just in case anything wrong happens. She'll be protected from her own personal self. Alternatively, let's say she doesn't have a lot of money. She doesn't, she's not really worried about the liability. It's a really small business where they're not doing that much. They're not planning on expanding. A sole proprietorship would be just fine for her. Another scenario could be that their business is doing amazing. They're going to be buying a building soon because they have so much money. They're going to be investing in warehouses. At that point, she should consider doing an LLC or corporation because she can get a lot better taxing on her assets, as well as not have to put them all on her personal income. There's a lot more advantages to that. And then it also protects her liability as well. So depending on where you are in your business or where you plan to be, you should always be ahead, right? Going into what you want to. You don't want to be upgrading your business to an LLC corporation at the last minute or too late. But you should be planning ahead, but also doing the one that's most appropriate for your current situation.